Hi everyone, I'm Kunal Sodhani, and we are once again here to discuss about the global macro trends, impact on different asset classes, and particularly what's going on with several currency pairs. So, talking about as we usually do with respect to the domestic factors, if we talk about the FPI flows, they have been amazing for the tune of 30,500 crores for the month of December itself. I'm just recalling when did we last see such highest numbers? The highest ever FPI number for this year, 2023, was seen in June to the tune of around 47,100 crores. If we talk about a debt inflows, debt inflows have been around 6,600 crores for the month of December itself. Going to FX reserves, we recently saw the monetary policy. It was status quo as expected, but there were some highlights which actually were quite interesting. If we talk about the growth numbers, RBI has revised its growth number for FY24 from 6.5% to 7%. And why? Because if we see the Q2 numbers, which was seen at 7.6% in terms of the growth numbers. But on the contrary, inflation numbers still remain with the same average of 5.4% for FY24. We have CPI data due today, where we expect it to be around 5.7%, though due to the rising vegetable prices. Last number was obviously lower, towards I think around 4.87%. But if we talk about the FX reserves, which we started with, they if till December 1st, I think it was around $604 billion. And as we have been discussing in several sessions, that RBI may be looking forward to raise these reserves towards the all-time highs, which were seen in October 2021 and 2022 levels, which was around to the tune of $642 billion. So I think it's quite clear all the inflows have been quite absorbed by RBI. And this is also a reflection, with a narrow range of where the dollar rupee has been trading. But what is happening globally? Globally, if we talk about, we have the Fed policy, which is due on 13th, and the decision will be out tomorrow, where obviously the expectation still remains status quo. But it's quite vital to see how 2024 behaves, because the markets are quite discounting around more than 100 basis point of rate cut starting from March by Fed. We also have policy of the ECB, which is on Thursday, and even by Bank of England, which is on Thursday. Again, no expectations of any kind of rate hike from that perspective. But all three, the major economies, where the commentary, the trajectory, and how do we see 2024 and what kind of guidelines do we find out, the dot plots which can be seen are quite vital to watch out for. If we talk about ECB, again around 135 basis of rate cut is priced in as per the debt market from those fronts. So definitely some heavy rate cuts are expected. I don't know how does it happen or no, because there are several big fundamentally movement of things which can be caused by elections by India, Russia, Ukraine, US presidential elections as well. So taking those into cues, it should be quite a volatile year next year. But talking about now and what's exactly happening in dollar rupee, it's still been stuck in a very narrow range of maybe 83.25 to 83.45. This has been the broader 20 paisa range. And if we talk about the positional range, only a break or a close below 83.10 may probably give us some indication towards some trend change. On the right side, 83.60 remains quite a crucial resistance zone. Also, if we talk about the bond front, next year bond inflows, the inclusion of the inflows of for the JP Morgan index, I think $35 billion of inflows are expected in a staggered manner, with an increment of maybe 1% on a month-on-month basis. Though the market has been quite sharp and discounted in nature, but once these start funds, comes into the market, the things possibly could be a bit different. All in all, for exporters, we still would suggest to hedge in a very staggered manner, having a stop loss in mind, a mental stop loss of 83.10. While for importers, forward premiums are lower. So any lower end, any day where we see a level toward 83.10 or around those levels, I think those are decent levels to pick up and hedge some kind of imports for the next 3 months at least. For traders, I think it's the right time, and people have been moving and selling options, trying to eat the time value or the premium, which we can say. So that's the best strategy, which is working out for traders, and possibly may continue for some more time till the time we see any kind of trend reversal or any kind of momentum on the upside. So that's all from my side, friends. Wishing you all a very happy and very energetic trading sessions moving ahead. Thank you so much, all. Thank you.